Bloomberg Audio Studios. Podcasts, radio, news. Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Musk's political aspirations in focus after the Tesla CEO says he's formed a new political party.
Plus more tariff warnings from President Trump today as countries rush to negotiate trade deals. We bring the tech angles.
And CoreWeave agrees to buy Core Scientific in a $9 billion all-stock transaction. We'll discuss that and the rest of the tech M&A landscape.
But first, we get to these markets that come off of record highs. Anxiety building around the trade announcements and indeed whether negotiations will go down to the wire come July 9th. I'm looking at the Nasdaq 100 off by 0.75% at the moment, Ed. We're seeing stocks down, bonds down, dollar higher. But there is one key company that drags from a points perspective, and you've got it.
Yeah, that's our top story, and that is Tesla. The stock down more than 7% in the session, now down more than 27% year to date. Musk says he's formed the America Party. The concern from the sell side in particular is that this is just more distraction, that Musk won't be as focused on Tesla as he pursues these political ambitions. There's also the factor weighing on the stock that is President Trump over the weekend commenting on the news of Musk setting up his own political party.
It's always been a two-party system, and I think starting a third party just adds to confusion. It really seems to have been developed for two parties. Third parties have never worked, so he can have fun with it, but I think it's ridiculous.
Let's get straight to Bloomberg's Max Chafkin. The president thinks it's ridiculous. Big investors, analyst notes out today, think it's really worrying.
Yeah, and, President Trump's political observation that, third-party candidates have generally not done well, that is true historically. And, of course, there's also just the risk that, having a poor relationship with the President of the United States, with the party that's in power, as Musk is trending towards, is going to have negative consequences, not just for Tesla, which, of course, does have, areas of exposure, regulatory exposure, as well as benefiting from these EV tax credits that are about to go away, but also for Musk's other companies. SpaceX, massive government contractor. Some of these other companies also depend on sort of regulatory, good relations with regulators. So lots and lots of risk here for investors, and I think that's what we're seeing in the stock.
We're showing some of Musk's posts on X over the weekend, as well as the president's response on Truth Social. But the catalyst was the big, beautiful bill. And Max, I think it'd be really helpful if you just explained, there's basically a difference in fiscal policy opinion here between Elon Musk and the president of the United States.
Well, there's a question of fiscal policy opinion, whether or not you agree that these tax cuts should have been extended, or I think from Musk's point of view, maybe there should be more cuts to pay for them. But then there's also the sort of vibes thing. Musk spent a lot of time and hurt his popularity through Doge, comes away cutting, a little less than $200 billion, maybe best case from the deficit. And now he's reading these headlines talking about trillions of dollars being added to the deficit, over a decade. And so I think there's a sort of personal affront. And I also think it's important we not miss the fact, and Trump brought this up in his post, that there are aspects of this tax bill that are going to affect the bottom line of Musk's companies. Now, it's possible that as Tesla, pivots to robotaxi, these hits won't matter as much. But we're talking about significant money that is going to make Tesla's cars more expensive for consumers, and that's going to cut into Tesla's margins, which we've already seen under pressure, over the last few quarters.
And that's exactly why analysts over at William Blair actually downgraded the stock today. JP Morgan said about 40% hit to profitability on the back of these regulatory changes. There is one note of optimism, though, coming from Radiant Global Advisors Jason Su, who had said, look, this is kind of the only option left to Elon Musk. Actually, it's a savvy political move. What did you make of that note, Max?
I think there's obviously always, different interpretations and so on. What we saw from investors when Musk and Donald Trump had their sort of first blow up at the beginning of June, and then they kind of like seemed to be patching things up. The stock started going better. I think you really have to squint to see how, starting some kind of quixotic third party is kind of a brilliant political move. I think, the consensus, you talk to Wall Street investors, you talk to bulls and bears, this is not going to help the company. This is a drag on the company. No matter what your point of view, obviously there are some exceptions. And, who knows? Elon Musk has pulled stranger things off before. So maybe this will turn out to be some kind of brilliant political gambit.
Bloomberg's Max Chafkin, thank you very much. Let's continue the conversation. James Fishback from Azoria Partners. He's a former advisor to the Department of Government Efficiency, or DOGE, and he's written an open letter to Tesla's board of directors calling on them to meet with Elon Musk and seek clarity over his political ambitions. Azoria is also postponing the listing of its Azoria Tesla Convexity ETF after Musk said he was forming a new political party. James Fishback joins us now. I think we just start with the basics, James, if we can. Why did you write that open letter to Tesla's board, and why do you think they need to understand the formation of the America Party in the context of whether or not is of net benefit to the company and Tesla's future goals?
Well, good morning, Ed. The truth is that when you have a full-time CEO in Elon Musk, who has been an extraordinary CEO, his time and energy needs to go to Tesla and synergistic companies like XAI or SpaceX. A political party, regardless of how I might feel or the president might feel about how ridiculous this stunt is, it does not help Tesla in any way, shape, or form. I wrote the Tesla board this weekend asking for one thing: clarity. Sit down with Elon Musk this week and clarify what his full-time obligation to Tesla will be in light of this new political party. If he cannot be Tesla's full-time CEO, the board needs to take that into account and needs to hold him accountable.
Has Tesla's board responded to your letter, James?
I have not heard back from Tesla's board yet. I'm confident that this week they are going to have this conversation with Mr. Musk. Let's just remind everyone listening, Elon Musk is free to burn his own money in a political party. He is not free to bring shareholders like us along with him. He does not own Tesla. We do. And if Elon Musk does not want to be the full-time CEO of Tesla, he should tell us now, because starting a new political party with the travel, the candidate recruitment, the training, and the organizing that comes with that is not a wise use of his time. Ed, he has been an extraordinary engineer and visionary leader for Tesla and for SpaceX. I have FSD in my car. I know you do as well. It is a magical technology. Robotaxi is brilliant. It's rolling out right now in Austin.
Right.
That's what his time and energy should be focused on, not trying to sabotage the President of the United States.
James, can you remind our audience your exact exposure to Tesla, how much you own, how that is the scale within assets under management of Azoria?
Yeah, absolutely. So this Tesla Convexity ETF very simply was designed to combine the power of owning an asymmetric stock like Tesla with asymmetric call options on an asymmetric stock like Tesla. And so this was upwards of $1 billion investment we were going to make on behalf of retail and institutional investors over the next few months in Tesla. We can't do that in good faith right now because you have a CEO who is putting personal political ambitions ahead of his obligations. And that is to the detriment of shareholders. And Caroline, there's a much bigger story at play here. In America, we have seen CEOs who have pursued and imposed a political agenda at the moral and financial detriment to their companies, which is why tomorrow we are still publicly listing our Azoria 500 Meritocracy ETF, which invests in the top 500 companies in America and excludes any company with a political DEI hiring target. Those are moral failures and they're financial ones as well.
Will that exclude Tesla? And what of the ETF future plans if you don't hear back from the board?
Well, look, we have to hear what the board is going to say first. My biggest concern now is that Mr. Musk, who I have a lot of respect for, that he is going to use his position at Tesla and resources and time and energy that could be better spent on Optimus robots, on robotaxi, on the new Model Y rollout, that he's going to use that time and energy on this new political party. Whether you agree with it or not, the truth is the CEO of a company has a full-time obligation to that company's employees and shareholders. And so we need to see clarity if we are going to revive the Azoria Tesla Convexity ETF. I hope we get that clarity, Caroline, because Tesla is the best AI investment that investors can make right now. Between the energy business, humanoid robots, full self-driving, and robotaxi, this is a compelling stock to invest in, but we can't do that right now when his political ambitions are front and center.
James, Tesla is the only publicly traded name in Elon Inc. across many companies, but he is also CEO of SpaceX and of XAI and has leadership role at Neuralink. And what I hear all the time from investors in XAI is actually they feel that's his primary focus, XAI. In the run-up to the November election, Musk was the biggest donor. What he wants to do with the America Party is back candidates for House and Senate seats. So how does that work? He's already stretched across multiple companies. What difference does it make if he's putting his own wealth towards a political endeavor? He's basically continuing with something he's been doing 8 or 9 months anyway.
Yeah, it's a great point, Ed. So his work at XAI or SpaceX directly complements his work at Tesla. So when you talk about the technologies, the GPUs, the Dojo models that's being used at Tesla, those are also carrying over to XAI. The synergies, the physical materials, the engineering breakthroughs at SpaceX have carried over into the Cybertruck, for example. So there's obvious synergies between his work at Tesla and at SpaceX and at XAI. No synergies exist between Tesla and its AI efforts and starting a political party that seeks to sabotage the President of the United States, who just delivered $1.2 trillion in spending cuts over the next 10 years. I don't get Elon. With all due respect to Elon, he promised $1 trillion in spending cuts over the last 6 months, didn't come anywhere close to delivering that, and now he wants to start a political party. Meanwhile, President Trump just signed in the big, beautiful bill this past weekend that actually delivered not just $1 trillion in spending cuts, but a record investment in our border security. Companies like Matroid benefiting from that, deploying AI vision technology at the border to stop human trafficking and drug smugglers. And then second, record tax relief for working families who, for under the Biden-Harris administration, were getting the very short end of the stick.
Bringing it back to the Tesla perspective here, though, in particular, rather than the political one. What about Musk's own pay package? What about potentially thinking of succession planning here? How is the board likely to respond to that? How are your retail investors that you've been building an ETF for going to respond to that, do you think?
That's a great question. Elon deserves to get paid for the extraordinary work he has done at Tesla. What that judge in Delaware did is nothing short of political lawfare. And Tesla shareholders, including Azoria, want him to be paid and paid hugely for the contributions he's made and the wealth that he's generated for all of us. So that is a separate issue. Now, of course, anytime you have a CEO as big and as bold and as visionary as Elon, you have to think about succession plans. I trust Robin, I trust the board to have this conversation with Elon this week to clarify his new America Party, not on the merits of what the party stands for, but what it means for his full-time obligations to Tesla as CEO.
Azoria CEO, James Fishback. Thanks for joining us today. We appreciate it. President Trump is set to announce more trade deals and deliver tariff warnings today. It's ahead of the Wednesday deadline. This comes as U.S. officials actually signal that trading partners will have potentially until August the 1st before tariffs actually kick in. For more, Bloomberg's Tyler Kendall is joining us now. So the clock is ticking, less than an hour. What do we expect to hear?
Yeah, hey, Caroline. As you said, we're almost to 12 p.m. Eastern, which is when President Trump said that we could expect the first round of his tariff letters to be sent out. He said to expect 12 to 15 countries to receive them. But at the moment, it really is unclear which ones are going to and how they're ultimately going to respond. Now, our understanding is the letters are going to be out in the next coming days. But really, the tariffs aren't going to be enacted for about 3 weeks' time, August 1st, which would suggest that the administration is open to negotiating further here, despite the July 9th deadline coming up on Wednesday. And we heard the Treasury Secretary Scott Bessent basically say as much in an interview over the weekend, saying that the playbook from the administration is what they would like to call maximum pressure. They're going to send out these letters in a bid to get our trading partners to put their best offer on the table. Now, I'll quickly point out one development that we've been tracking, which is really sort of a reversal in which countries seem to be getting priority here when it comes to talks. The administration has expressed frustration when it comes to Japan, for example. And you had President Trump this morning threatening an additional 10% tariff on any country that aligns with the BRICS after that group of nations held a summit over the weekend, which could spell trouble for India, of course. But Caroline and Ed, pair that with confirmation this morning that the European Union's Ursula von der Leyen had a phone call with President Trump just yesterday, and what really does feel like a reversal of favor for the trading bloc, which we had been, our understanding had been, was really at the end of the negotiating line.
Bloomberg's Tyler Kendall from Washington, D.C. Thank you very much. Let's get more on global tariffs and their impact. Joining us now is Liza Tobin, Garno Global Managing Director. Your trade, Liza, is advising on geopolitical risk. You heard Tyler's reporting there. How much is this about managing expectations versus getting something definitive from this administration today on what has been agreed and what will be agreed in the weeks to come?
Right. Good morning, Ed and Caroline. It's nice to be on with you. Yeah, Secretary Scott Bessent has messaged this as a maximum pressure campaign. So they're trying to ratchet up the pressure and get more concessions from U.S. trading partners. It does seem that by kicking the deadline back to August 1st, they are needing more political wins. They need more deals in order to make this look like more of a success. But what I think markets may be missing at the moment is that there is another big chapter in President Trump's trade agenda kind of looming in the background, and that's the sectoral tariffs. So, of course, what we're all obsessing about right now is the reciprocal tariffs. And there's a lot of uncertainty. The uncertainty keeps extending. And the U.S. courts are raising more questions about the legality of these reciprocal tariffs. But by contrast, the Department of Commerce, meanwhile, is undertaking these investigations to lay the groundwork for sectoral tariffs. These are the Section 232 investigations into things like semiconductors and pharma and various metals and a whole host of other key things. And if you'll recall, this investigation, Commerce has this authority in terms of looking at the national security vulnerability. So that's still looming. It's been delayed by these trade negotiations, but it's still coming, and it's arguably a lot more consequential than reciprocal tariffs.
A lot of that directly relates to China, right? And the latest headline is the president warning an additional 10% tariff in response to anti-American policies, as he calls them, from BRICS nations. But if you consider the BRICS nations and where this administration is focused, all of these different negotiations happen in parallel. Do you think China gets more time and is more of a priority than anyone else?
Yeah, there's a few trade partners that are sort of on a separate track, and they're not really part of these ongoing reciprocal tariff negotiations. China, Canada, and Mexico. You know, Canada and Mexico, of course, because they're USMCA trade partners, and they're on a separate track. But China, because the president has been saying that he has a deal already with China. This is coming out of the London trade talks. What you really have there is more of just a fragile truce that's centered around rare earths and export controls. And so it's very fragile. I think the administration would like to keep the door open to further trade talks and maybe some kind of a phase 2 with China. They would like to see China open up more. But of course, it takes two to tango. And China has consistently disappointed U.S. trade negotiators. And what Washington may try to offer towards Beijing as concessions or conciliatory diplomatic moves will be read in Beijing as softness and weakness, and they will push harder for more concessions. So I think there's a lot of fragility here, and either side could tip over this apple cart in terms of this kind of fragile U.S.-China truce.
Oh, apple cart. It takes me exactly where I want to go, because for us in the world of technology, Apple has been the front line of fire when it comes to tariff exposure. We also think of the chip, the semiconductor names, and you mentioned Section 232. All of this, give us the advice you're giving leadership at corporate America right now. Do you navigate tariffs like this, or do you ultimately take the takeaway is build more in America and signal more rather than see the realities of where tariffs go in the next month or week?
I think with China, you have to have a China strategy, and that has to take the medium and long term into account. It has to take into account China's track record, and the track record over decades, really, of U.S.-China trade negotiations eventually disappointing and breaking down. So I think you kind of have to bake that in. What remains to be seen is how seriously the administration will back up President Trump's desire to reindustrialize here in the United States. There's some areas where this sort of conflict among goals is quite striking. For one thing, the U.S. needs a strategy on rare earths. I think the U.S. dependency on China for rare earths and permanent magnets has become really a hot topic and that everyone's tracking now. But we still don't have, the U.S. still doesn't have a strategy to deal with the lack of demand, really. And what you saw in the Big Beautiful Bill over the weekend was there had been some measures in place, on the green energy side to put more funding towards solar and wind power that would have created more sustainable demand for the offtake of these nascent rare earth projects. That was stripped out of the bill, unfortunately. So I think you need to see more, an array of support beyond tariffs to strategies to reindustrializing in the United States.
Liza Tobin of Garno Global. Great to catch up with you. Thank you. Now coming up, TikTok may be building a brand new app for US users. That story's next in Talking Tech. This is Bloomberg Tech. Time now for Talking Tech, and first up, Huawei's AI research lab is pushing back on allegations it relied on rival models to develop its own platform. Now, the accusations come after the company published the source code for its Pangu Pro MOE model. That was last week, where users on GitHub debated its origins. Huawei responding, stating the use of open source code is common practice, and they strictly adhere to licenses. Plus, China hits back at EU restrictions on their medical device makers, announcing reciprocal curbs. Beijing says it will exclude EU-based companies from Chinese government procurement on certain medical devices. The move comes ahead of high-stakes meetings between the EU and Chinese leaders. And TikTok may be building a new version of its app for US users. It's according to reports, and the company is planning to launch the new app on September the 5th. TikTok users would have to download the new app and migrate in order to continue using the social media platform. Now, the existing app, it's said to work only until March of next year. Ed.
Okay, coming up, CoreWeave agrees to buy Core Scientific in a $9 billion all-stock transaction. We've got the details of some Monday M&A coming up next. This is Bloomberg Tech. Welcome back to Bloomberg Tech. I'm looking at a couple of big tech names moving to the downside. And what's interesting about Apple and Alphabet, both lower this Monday, is news out of the EU. So starting with Apple, Apple is appealing that 500 million euro fine that was relating to the App Store, saying that the requirements the EU has for App Store changes are unlawful. Maybe some pressure there. Similarly, Alphabet or Google is saying that it's going to list the search results of competitors right at the top of the page in order to conform to the Digital Markets Act. Again, a stock that's down 1%. That news came out on July 4th holiday here in America. Maybe it's having an impact. Then there's the big one. Tesla, the biggest mover to the downside in terms of the points drag on those major indices. Elon Musk has founded the America Party. The sell side are worried that it's going to be a distraction away from Tesla, his core obligation, and there's the impact of the President of the United States commenting on that. Later in the program, we're going to go out to Craig Trudell. He's going to give us a lot more of the market reaction in this story, Cara.
Yeah, amid all of that, though, we got some M&A news, Ed. And that's as Capgemini in France races to build bolder AI offerings with a transatlantic deal. And here in the US, CoreWeave has agreed to buy Core Scientific to expand its data center capacity. Again, it's capitalizing on AI demand. Liana Baker's here with us, who leads the deal team. Liana, let's go to CoreWeave and Core Scientific first, because this is all about the need for compute. They actually eyed the asset about a year ago for a much less price point.
And since then, Core Scientific shares have gone up a lot, so I think patience has paid off for them. Although you might see that shares are down today. That's something we're following closely because you don't often see that in M&A. But because it's an all-stock deal and CoreWeave is a pretty volatile stock, that could be weighing on shares. Core Scientific.
There's also this kind of broader M&A Monday vibe. Capgemini is doing something in the market to get itself up to speed on AI. What do we know about the backstory here? I've been reading reports about this piece of M&A for some time.
Thanks, Ed. We've been all over this story. So Capgemini first started talks with this company a couple months ago. They were in advanced negotiations, and then we had dislocation in the market. You might remember all that tariff drama. So talks sort of stalled there, but then it came back. We've been hearing a few weeks ago that things were happening. We were trying to get that final price. We didn't get there, unfortunately, but you saw it announced today. Since then, since talks broke off, the euro has strengthened a bit. Maybe that came into play, but definitely there's going to be consolidation among companies that consult other companies. These B2B companies are being affected by AI, and that's going to be a trend that we're seeing. So I'd say WNS is looking to get stronger here by getting with a bigger rival.
Bloomberg's Liana Baker, who leads our deals team. Thank you very much. Let's get back to today's big story. Tesla. After CEO Elon Musk announced the formation of a new political party, how do investors feel about it? Let's bring in Michael Green, portfolio manager and chief strategist at Simplify Asset Management. I was on the Bloomberg on the HDS function. I think you have a very small holding in Tesla, maybe 13,000 shares or so, so clarify that for us. But your reaction is somebody that has exposure to that name and Elon Musk forming a political party, how do you react?
Well, very quickly, so Simplify has a 2x levered variant of the Tesla fund that provides access to that. It is a very small fund. As an investor in Tesla, however, I would argue that this is not so much a choice that he has, but almost an inevitability at this point. Tesla is very closely, as is SpaceX and related businesses from Elon Musk. They're very heavily tied into the political allocation machine, whether that is the Department of Defense and NASA through SpaceX, or whether that is through the environmental credits associated with Tesla and solar. This is a business that is deeply tied into the political framework. And at the end of the day, unfortunately, Elon Musk has now managed to basically alienate both Democrats and Republicans. Democrats by aligning with Trump initially and the anti-woke movement, and now, of course, Republicans by breaking with Donald Trump and launching the American Party. I've drawn the analogy that this is much more like William Randolph Hearst than any form of traditional technologist. He's largely known at this point for his political and communications empire in the form of Twitter, right. The town square. That really seems to be setting the tone here, whether he is establishing something
as opposed to being the key inventor or the technical brain himself, right? Like the thing that we always go back to is that in many annual regulatory filings, in the boilerplate, they'll put Elon Musk is essential to this company. And if anything were to happen to him, that would be to Tesla's detriment. But as I know, I've reported a lot on it, right? There are many talented and influential and impactful people at that company. Even so, there is an element of key man risk from Tesla's own perspective. It's in the filings.
Yeah, at the end of the day, the Tesla buyer is suffering from their car being keyed in a parking lot, not because of the technologist, but because of the chief executive officer and a leader of the company. That is clearly a risk, both from a management standpoint and a talent acquisition standpoint. He is a transformative figure to many in the technology space who dared to actually build stuff in a technology world that was largely focused around consumer apps. But he is not the inventor. He is not the key technologist. What he is the key spokesperson. And so the underlying behavior that is occurring here, it's not entirely clear that he has a choice to back away from the political sphere, given the exposure that his businesses have. Whether this is reckless or not is ultimately going to be determined by the history books. We can't really know the influence, but with a deeply divided electorate, the threat of a third party does have the potential to disrupt elections, primarily hurting Republicans much more than it would likely hurt Democrats.
This is a global company as well. And Michael, we've seen the impact in Europe that Musk's political affiliations have had. You then think about China, where real growth engine for them, but maybe China starts to look at the lessening in political weight that Elon has had with the administration, backs away there, and then you got competition. Do you remain as exposed to this name, as little as it is?
Well, ultimately, we have a fund that is dedicated to Tesla, so we will buy that just based on whether shareholders want exposure to that name or not through that fund. But at the end of the day, this is a business that for the very first time in history is actually looking at the potential for a sales decline. It has had extraordinary success in a few models. The Model Y was obviously a huge runaway success. But it has an aging product mix. It has significant new competition, particularly from Chinese companies coming in. And this is, of course, creating conditions under which the business itself is very much under threat. It has always been a bit of a mystery from a valuation standpoint. And so it's very hard to create a compelling argument for why you should be aggressively buying Tesla now, other than the desire to gain exposure to a very high volatility, high beta name, which has been one of the key characteristics that have attracted people to it over time.
Yeah, Michael, give us the signal that you're getting from those that have wanted to get into your fund, that have wanted the exposure to the volatility or to the mystery around Elon Musk in and of itself. Is that waned in any way in the current political environment?
We haven't really seen it wane in any meaningful way, but the reality is that most of these levered ETFs are simply offering investors a tool to access lower cost leverage than they could obtain through a margin account. You can get a 2x levered exposure at a fraction of the cost once you factor in management fees and the cost of the leverage that can be obtained in the institutional space. It's much less expensive than trying to obtain that through margin or through options. And so the argument is very compelling. If you want that levered exposure, the question is ultimately, do you want levered exposure to a business that really has gone somewhat ex-growth and is now looking at a situation in which those political liabilities, both in China, where it's perceived as an American company at a time period where that's probably not particularly attractive, Europe, similar phenomenon, and as I mentioned, growing competition in the United States, as well as the political headwinds, make this a very challenging environment for Elon Musk.
Fascinating conversation. Michael Green of Simplify Asset Management. Appreciate your time today. Now coming up, more crackdown on chips as the US, well, we're looking at the White House saying to prepare more chip curbs in an effort to combat smuggling into China. More on that next. This is Bloomberg Tech.
The White House is set to restrict shipments of AI chips to Malaysia and Thailand in an effort to crack down on suspected chip smuggling into China. That's according to sources. For more, let's get out to Bloomberg's Mike Shepard in Washington, D.C. It's a very clear story, right, that the restriction is to prevent the flow of advanced semiconductors through a backdoor third party into China. What do we know?
Well, what we're hearing from the Commerce Department is that we may be seeing a move soon to try to limit sales. It will require companies based in Malaysia or Thailand to obtain licenses to buy these advanced AI chips. This pretty much, when you think about it, it is NVIDIA and also AMD that makes the most advanced out there used for artificial intelligence purposes. And the idea is to prevent those buyers in Malaysia and Thailand from diverting chips possibly to Thailand and to China. And the concern that the U.S. has articulated over and over again, and it's not just the current administration, but the prior administration too, was that other countries could be, through their prior relationships with China, a source of chips that China right now is prohibited from buying. The U.S. has imposed restriction after restriction since the early part of the 2020s aimed at keeping these advanced chips from China to slow its position in the race to dominate artificial intelligence. Now, what is unclear is where this rule is. It's still in the draft stages. Things could still change. And it's important to note that Secretary of State Marco Rubio is heading to the region. He'll be in Kuala Lumpur later this week for a regional meeting of foreign policy chiefs from various countries in the area. They obviously have a lot at stake when it comes to the tariffs that the Trump administration is preparing to unleash on so many of those countries, not just Malaysia and Thailand, but so many others in the region. But they're also going to be concerned as well about export controls. This step is also considered another glimpse of what would replace what the Biden administration had unveiled in its final days before leaving office, the so-called AI diffusion rule that restricted countries' access on a three-tiered basis. But it was an approach that many in the industry and many allies around the world had viewed as cumbersome and perhaps unfair to them.
Well said, Mike Shepard. Appreciate the update. Look, let's get an investor perspective on those potential chip curbs and more broadly. Beth Kindig is with us, IO Fund lead technology analyst. So despite all of this and the clear narrative that US wants to restrict access to technology to China, we still have Jensen Huang actually wanting to sell into China more long term. Beth, is that a fool's dream?
Yeah, I think there are two sides to this. From NVIDIA's perspective, they don't want to lose that revenue. This is a massive country. But what the United States government is really communicating is that the technology has too far-reaching implications for this to really be about like the next consumer app, the next enterprise app. This is really a matter of national security. From an investor standpoint, I love that demand signal. I love the signal that the United States government is doing everything they can to control this technology. I don't have demand concerns. I think this is bullish regardless of if NVIDIA sells into China or not.
What about supply? Concerns, therefore, and whether or not we're able to bring the manufacturing and the expertise into the United States so that we're not so dependent to be able to make such sophisticated technology abroad.
Yeah, I think a lot of this is hitting the news wires now and has been over, let's just say, the last 6 months. But the United States has been preparing for this for years. We know that because Taiwan Semiconductor has built this fab in Arizona. This is not an overnight project. It's been going on for years as someone who's tracked AI for many, many years. Therefore, I think we are more prepared than what might be assumed right now to onshore and to keep those supply chains fairly domestic.
Beth, we saw shares in Malaysia and Thailand drop overnight in those respective fields, data center, chips. But many of the sell-side notes point out that actually those most exposed to this potential initiative are American companies. Which American companies do you worry about?
I will be quite bold and tell you I'm not too worried about this. I think if there was ever a technology that has this outsized demand, and it goes back to, is it going to be 500 billion? Is it going to be 700 billion in AI chip sales by the time we end this decade? Maybe even higher. And I have very little concern over what the China impact would be specifically on this technology. It is not a consumer technology. Consumer technologies, your Tesla, your Apple, they badly need China's population. This is not a consumer technology. It's primarily enterprise. And then, of course, you have sovereign AI at the government level. We really do not need China the way we did on the consumer side with those other technologies.
Beth, you mentioned one demand signal. I follow you on social. Which other hard and soft data sets are you tracking right now to give you your demand signals that inform your thesis?
What we probably track most closely is really those generation of GPUs, that product roadmap by NVIDIA. And then, of course, within that supply chain, there are many partners that will give you early signals. What I'm hearing and what I'm seeing is we will close this year with NVIDIA on top again, zero demand issues again. 2023 and 2024 combined is what we have for H2 of 2025. That is a very big statement, and it's so far so good. Green light.
Green light, NVIDIA, stay with it, Beth. It's interesting that maybe we think about an Oracle and its exposure to trying to build out its cloud offering over in Malaysia, for example, and maybe that has to be thought through a little bit more and politically negotiated if there are limitations to access to the GPUs that it needs over there. Who are the other names that you do like? Is it all just about NVIDIA as a one-stop shop, or can you broaden it out?
I'm still loving hardware quite a bit. When we look at NVIDIA, there are companies sandwiched between that custom silicon, which is going to see a resurgence off inference, and one stock that's in between NVIDIA and something like Amazon's Trainium is Astera Labs.
Beth Kindig, the Bio Fund, great to have you back on Bloomberg Tech. Thank you very much.
I believe you've now hit a point. I think the board's going to have to get involved because this is now over. I think there's a line in the sand that he's now starting to cross, and that's the frustration. As someone that's a huge supporter of Tesla, autonomous, the golden age ahead, you cannot kind of go down this path.
That was Wedbush analyst Dan Ives there earlier today, weighing in on Musk's political aspirations. And here's what Jed Dorsheimer from William Blair had to say as well.
With Elon, it's a little bit of a double-edged sword where, I would argue what people are paying for is his ability to innovate. Elon Musk is one of the great innovators of our modern day. So taking him out, does the board really, would they really want that? And I think, when you kind of ask that difficult question, I just don't see them stepping in at this stage.
Bloomberg's Craig Jadell is here to unpack the impact of the news on Tesla shares. We got the sell-side reaction in those sound bites, but investor sentiment mirrors that as well.
Yeah, I think that's right. I think Musk may have had a point when he told us back in May that, for every person on the political left that he was turning off with his actions in Washington, he was, perhaps opening some doors for Tesla on the political right. Now he's potentially getting himself on the wrong side of the GOP and on the wrong side of President Trump. And, I think there's probably a fair number of consumers, too, who would just say altogether, I'd rather not have my car sort of be wrapped up in the politics of the world's richest person and have what I drive sort of send some political signal altogether. That's not, a reason necessarily for people to go out and buy your car.
And they haven't been. We saw the sales down 13% in the previous quarter, Craig. We're also seeing the impact on the stock. We're down another $71 billion in terms of market cap today. But we're not actually at the depths that we saw in the previous feud at the beginning of June. What does that tell us?
Yeah, I think this is still a stock that is pretty richly valued and maybe has some value, ascribed to it left over from, even if we think back to just where the shares were trading before Trump won the election, right? The stock is still up from those levels. And so, are we going to see investors continue to rethink and sort of reevaluate whether this company has a better shot with an Elon Musk who has gone from maybe being well positioned with the White House to now not being well positioned at all and perhaps even becoming something of a foe for President Trump?
Craig, I wrote to Tesla's board this morning through the avenues that are available to me. I wrote to Elon. As you know, I regularly ask him to come on the program. Do we have any sense of the Tesla response at all? And if the answer is no, I think that's okay because it's pretty standard.
Yeah, I think this is a board that has been pretty, mum's the word over the years and really has only piped up in very, rare circumstances. I think
it's going to be interesting in the months to come, what exactly this board has planned for a compensation package for Musk. We know that Tesla disclosed earlier this year that it had set up a special committee for compensation-related matters. And, so not only is there this question of, just how much the board wants him around, but also how are they going to keep him around?
Craig Trudell, we appreciate it from London. Now that does it for this edition of Bloomberg Tech Ed.
Yeah, don't forget to check out the podcast. You know where to find it. It's on the Bloomberg terminal, as well as online on Apple, Spotify, and on iHeart. From New York City and San Francisco, this is Bloomberg Tech.